The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon at 877-927-6648. Look at this chart I'm showing right here. This is the 10-minute E-mini. Friday's a technical Friday. There was a cup formation and then an arch formation. And that was at the close yesterday, where the close was at 2038.25. Well, that was the low. And 10-minute chart went like an H to a lowercase m pattern, and then failed. And the rule of thumb is that if you fail the left side low of the H pattern, let me see in my Chapman wave, introducing the Chapman wave methodology, we call this, let me just double check here, excuse me. This is chapter 17. We're going to go to chapter 17 right here. We used to call it the dreaded H. I still call it the dreaded H, because if it closes below the left side post, it's a problem. So in this case, what we're looking at is, let me go here, next chart, show you the pattern. Pattern shows you that there's a series sometimes of H's, that's what we've just seen in the market, that fail that left side low bar and make an extension to the downside. They try again, and then at some point you make an even larger one, or you make that V-shaped turnaround. So let me take this aside, let me put that over there, and show you that the H pattern failed. And the rule is, in the Chapman wave methodology, that you have that bar or maximum one more bar to try to get back to that level that you broke, in this case 2038. If you cannot do it really quickly, and unless you get a brand new buy signal based on other criteria, the stochastic, the MACD, and all sorts of things, chart patterns, you can expect that you're going to be retesting the low that you just made. In fact, the low of 2034 made at 6:40 on the 13th, that's this morning, 20 to 7 Eastern time, made another H pattern, just dipped under it, but closed above it. Closed above the arch formation and said, okay, now you can tackle the left side high of importance. Couldn't get there. It's a single leg A up failure pattern. Kaplop, it comes down, and now at 2022.75, the low, actually it's pretty much a double bottom low that was made at 202.275. Right, so we've made some kind of a little mini double bottom, and then with the Chapman wave chin gauge flashing that says be careful, because at some point within 2 days you're going to get a surprise acceleration to the upside. That upside could be as much as 9 to even 12 S&P futures points. That could translate into a very nice rally in the cash indices. We'll see if that's about to happen now, because we've had a pretty steep decline to the downside. I have to tell you, some of the major sectors that we've been looking at that have been on a tear to the upside for the whole year have started to show deterioration. This is going to be an important phase. So now let's go to the numbers. Well, first of all, thank you to Tommy and Tommy. Thank you to Larry. Thanks to John. I will go to the webinar archive, John. I just didn't have a chance last night to do it. And looking forward to it, but that explanation of the TAS market profile should have been fantastic. I was really looking forward to it, and I will be looking forward to it if I'm able to get that archive and check it out over the weekend. So let's go to this E-mini, down 14. You see the arch formation that's forming from the peak F top. Remember the Chapman wave, the peak F top is where you've got to be really careful. If at an F, you start to see the stochastic and MACD turn down, if you're using the technicals, if it closes decisively under the 9-period exponential moving average, subscribers know that I was looking at a shorter term moving average that said, hey, start going to the short side, which we did. We took our profits just a little too soon, but we've kept a lot of shorts which are accelerating to the downside. Actually, for some of them, it's the upside, because we have the inversion. Actually, I guess the best way is in a little while I'm going to show the positions, etc., because I think that's the only way you can actually get to understand someone's work and what they do and how they do it. So the decline in the E-mini, which is now with Friday being the end of the week, watching this closely under the 200-period moving average now by about a point or so, under the 9-period exponential moving average of the 100 of the weekly chart, which is at 2000 and let me just get that right. Yeah, 2032. We're at 2027. Watching this really closely, and here's the 120-minute chart. I suspect that we're attempting right now to make some kind of a bottom. Let me just grab this chart for a minute, and we'll see if I can get the volatility index here. Let's go VIX.X. Oh, can't believe it. We have it at 584, one of the VIX instruments, 200% long. And we got out of the, I thought it was a nice profit, 5 or 6%. Oh, man. It went from 558 to the high today of, I'll tell you in a minute, in the 770s. I mean, that is 2 points. That's a huge percent. Anyway, miss is a miss. And now we've got A, B, C, D, E. Yeah, so the volatility index is right at an area that says this is a period where the volatility index should be bumping into some kind of resistance on the 10-minute chart. The ESZ15 E-minis. This is the period where you should start to see some kind of attempt at a basing level. But when the spike to the upside comes between today and tomorrow, it could be as quick as not the opening bell, but I'd say the period after, was that after 10:30, 10? Yeah, that acceleration from 10:10, 10 o'clock, 10 past 10 this morning to the low of 20 past 10. That was 2 huge candles, and that's the kind of thing you might see on the upside at some point. But that's just a counter trend trade at this particular time. Why? Now let's go to the numbers, and I'll explain why. And I'll go back to my charts in a moment, showing the Chapman wave methodology on balance volume, the questions I had during the week that I wasn't able to answer. The Dow's down 148 at 17,299. This is important. Why? Because if you're looking at the daily chart, the 200-period exponential moving average, this is what I showed my subscribers to my opening call this morning. I said the 17,345 200-period exponential moving average is likely to be achieved soon, while the upside is now limited. So we've already gone down to 17,283. We'll see if we can bounce back above the 200-period moving average by the end of the day. It's a very important period. Yesterday, a Chapman wave trend gauge flashing that there should be a sharp futures rally that translates into the cash indexes within 2 days. All that says is, I had an email saying, hey, your gauge is very high. Does that mean to get out of all your shorts? Absolutely not. All it says is just be aware that you to have patience, because you might have another opportunity, in this case, maybe to short on that very big rally that I'm expecting, counter trend rally, intraday rally. That's all. And it's just a great indicator. It's got a huge success rate. The Chapman wave trend gauge overall, between the 2 parts of the trend gauge, I think is about a 96 to a 98%. It could even be higher percent accuracy rate. So now let's just go back to our story. So that's the Dow. Here's the S&P. Being Friday, just like on a Monday, I'd like to spend just a little time as we get into the different indices. The S&P is down below the 200-period moving average, down 16 at 2024. On the 120-minute chart, if I can just move this away for a second. Actually, let me do this. 120-minute chart. Right. All right, there we go. And I want to then move it a little bit to the downside like that. Yeah, the 120-minute chart, the stochastic's flat at 6%. It's going to say any rally. It's just going to have to come out of the blue from something, because this is really negative action. It's broken key support levels, and the balance might just be transitory. We'll see if it picks up at all. So, and it says on the upside, 2027 to 2032, 33, where we were just a short while ago. That's going to be the resistance. IWM right now is at made a peak E. I can now put a down arrow right there instead of the red plus sign. down arrow. You remember the pattern we were looking at? The leg, the body, the neck, the head, and now the beak. And the beak goes into the body. If it takes out the low of the body, that's very negative. And that would be under 112.71. It's at 114.28, down 62. But this is the kicker. When this pattern completes, it usually has a fabulous spring to the upside. And then you're on your own. Then you have to use other techniques. So what is it? It's a 5-part series. 1, 2, 3, 4, 5, 6-part series. You got your leg to the upside. That can be made up of different peaks, but it's really a very strong, powerful move. It stalls, and then it makes an oval pattern, not a rectangle, but an oval pattern. And then that oval pattern says you should break out above the high of the oval. Start the neck pattern. Neck doesn't tell you. It could be a very short neck, could be a long neck, but it looks like a stalk, standing on one leg with the body, and then you get the neck, and then you get the head. Sometimes the head is made up of a couple of sideways moves. Sometimes it just goes straight, neck, bam, head. And then the beak starts on the way down. The beak invariably takes out the high of the oval, in this case 117.14. That's 3 points ago. And if it goes into halfway, you've got to be careful because it could retest the bottom. So the weekly chart is now very negative, and the monthly chart is on a watch, and we're going to be watching, and the 120-minute chart has just hit 200-period moving average support. So we're getting a couple of little ducks in line here that say we're trying to formulate some kind of a pattern that says this is the area where there should be some support, and if there isn't support, watch out below. QQQ series was the best acting of the indices, and that went to new recovery high. Nearly hit an all-time high. 114.34 was the high, and 120 is the all-time high. Power Shares Trust series. Let me just open this up a little bit, and now let me show you something else. Arch formation. We've already covered a chunk of the gap. 109.80 is the high of the 22nd before it gapped up with 112.07 low, and now 110.38. We've taken 110.38. We've taken the price right into the gap. 109.80 is going to be key support. Weekly chart. Now, this is going to be the big, there's always something in the charts where everything's looking just great, and then you get this one thing that says, uh-oh, how can that be? And what is the how can that be? The how can that be is if with this breakout to leg B, and obviously it'll be a peak B today because there's absolutely no way, I'm going to say this with absolute certainty, there's no way that the QQQ series could go to 115.48 to extend this leg, so it's going to be a peak B by the end of the day. And you've made a low. You've gone at 26%. You know that 26% decline is a big decline. That's almost like a major decline. At 84.74, even if people could have already traded there. But here's the big kicker. It broke the latest buy signal at 99.36. So that means that you've started a brand new buy mode by going to a recovery high. I'll talk about this because it's so important. It's part of the structure of the Elliott wave that I'll be talking to my subscribers about, or at least showing over the weekend. I'll be back. Basil Chapman, Dow 160.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So this is going to be very interesting. You see there was a low here. I typed it in. 112.07 was the low right there. Did I just discuss that on the 23rd, the gap up in the QQQ series? Well, we just gapped down below it today. So that's an island reversal, and it's important to note. But at the same time, the day's young. There's a daily bar, and that daily bar could be filled in, but it's going to be tough to do. Now, this is going to be very important. So the QQQ series has the 108 to 106.5 area target on the right side. The left side, we've already accomplished exactly what I was looking for. Left side, right side, price, time match into the gap. That's one thing that's important. But it's that fact that we've gone to the new high in the weekly chart. It's leg E, I'm calling it, at least for now, in the monthly chart. This is going to be very important. Why? Because it suggests that the QQQ series shouldn't go down much more than to the up channel support, which is at about 107, in the 107s, right? So there's only 3.5 points away. We've already done 3 points in just, 2 days. So this is going to tell me whether or not, because if in fact, we start to go into in the month of November, if we start to going into December, then you're breaking down, you're going to the 103s, that's going to suggest something else. It's going to suggest time. It's going to just suggest a whole bunch of things, making the upside very limited. And when you look at many of the stocks, yeah, they've done very well. Let me do this quick. Actually, no, let me just finish what I'm doing. So we've got, let me move that away. We've got, I just wanted to show my TFNN shirt right here. If my my producer can do that. There's my beautiful black T-shirt with the TFNN sign. Can you see it? Am I able to show it? Am I right there? There it is, TFNN. I love that shirt, nice. So what we're looking at here is something that says there are a lot of factors, and if I'm going to grab a bunch while we're doing the Qs, look at Amazon. Amazon's just a pullback here so far. But wait a minute, a pullback with an on-balance volume. There's that on-balance volume turning down, stochastic turning down, relative strength right over there turning down. MACD hasn't crossed positive, but it is turning down. Stochastic still weighing 91%. That allows a lot of room. So that says that we've got to monitor these leaders. What are the, oh, I wanted to do Visa. Look how strong Visa's been. It's only down 3 cents today. Remember Jennifer from Wellesley called. We're looking at Visa, and I said just we should try somehow to stay in as long as possible because it's acting so well. So it hasn't really broken down yet. I think if it starts to take at 78.27, if it breaks the 77, 76 support, then it's probably going to go down another few points at least. But look, there are some stocks that are just refusing to go down. So now let's go back to our story. The next thing is we want to look at is the RTH. This poor old RTH is just gaps down right through the 200 period exponential moving average. Talking to Tom about it, this can turn out to be a peak C minus because there was your peak E. In fact, peak F was a 2-bar reversal at 79.25. Back 79.50 with the next high 79.25, a Chapman wave 2-bar reversal back in July of this year. So this is something to really monitor. So far, monthly chart is still saying, hey, I'm doing well price-wise, but look at the technical starting to fail. I'm watching this really close. So this is suggesting this season between Hanukkah and Christmas and whatever other holidays there are, could be a tough one. I think that my estimation here is that the sales, I was there the other night, we were at we had to get something. The sales that are going on are just starting, and they're down to that 30-50% area. That is really something. J&J in the den says, look at Nike. Well, Nike's been a fantastic winner. I was about to short Nike. We've got others that are making all-time highs. Look at this. It made that little triangle, the symmetric triangle. It has a Chapman wave 2-bar reversal, 133.52 to 133.36. Peak D goes to a potential peak F. Now, here's something very different. Goes to new all-time high, recycles. And technically, I have to go with this, and I have to say, you know what? Because of the quickness, this is really a plus sign and a plus sign, and there's a really good chance that this is actually the down arrow. I don't want to put it in right now, even though at peak F, we almost always put in down arrows. I'm just going to put a question mark above here. We don't have any position in this, so I've got time. I'm just looking at it. But the potential for a hat trick top in Nike with a 2-bar reversal in the monthly chart, aye. So this is 122.22 down minus 376, down 3%. Watching this really closely. Okay, let's go on now. We want to look at gold. At this particular point, gold is about unchanged at 1081. Silver is also about unchanged at 1420. Platinum's down sharply. High-grade copper's even lower. And you've got crude oil down $1.32 at 40.44. And bonds are up 30 seconds. We have to talk about this. I'll be right back. Basil Chapman, Target Conditions Hour. Dow's down 139, S&P's down 14.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, so we're back. And a bunch of questions that I will try to deal with. Let me just have a quick look on the side here with my 1, 2, 3, 4, 5, 6, 7 monitors or whatever it is. Which one? I'm looking at that one. Okay. Right, here we go. So I was talking about gold, and the question then was the GDX. Well, there's a pattern that we look at in the Chapman wave that's called, here we go, let me put it in right here, in the different chapters. We're really looking at the arch formation. So chapter 13, we're going to go to the arch formation and the inside wedge. So in this particular instance, let me show you a couple of things here. You see this pattern here? This is the BBH. This is from way back. This is the biotech holders, the S&P. There was an arch formation, and that arch formation went to a high, and then it started to break down. There was an isolated move up. I call that a rogue wave. That's not really the point of this exercise right now. I did 2 things at once. You should always do one thing at once if you're trying to show something. And there's another one, the arch formation in the S&P. This is back in August of 2005 with a sell signal. You see the 90 degrees and 90 degrees. You see this first support. You see the right side. You see this red line, that dashed line. You see the way the MACD, you don't even have to use these tools. Look, when I go to this one right here, I don't need to use these tools at all, because you can use it based just on the patterns. The market moves only three ways. It's a direct straight line move up or down. It is an arch formation that could be made up as a V formation. It's the same principle, slightly different implications, or a cup formation, and that could be a V-shaped pattern. Arch, cup, straight line. Case closed. That's as far as I'm concerned. And of course, within that, you can get other patterns, but when you diagnose and you assess them, the chances are it comes back to the same thing. Now, when you're looking at this particular GDX pattern, you see this arch that was made right there. And if I go from the left side to the peak D top, I get a right side, and it says that sometime towards the 17th of November, there should be a test, first of all, of the left side key lows that were very important at 1319 on the GDX, but 1262 would be the target. And we've already gone down to test the left side low at 1329. A little bit of a rally here. We'll see what happens. But by early next week, there should be another test of the bottom. It doesn't have to be, but it is just remarkable how many times I love when you get the chance, at least, to look at an exact plumb line, the pivot point change right there, that is the high, peak D, or a trough D, or something like that, a Chapman wave reversal signal. Okay? So that's that. But when you're looking at the weekly chart, this is a terrible, look how quickly we've come down. You've come down even quicker to this point than you went, no, about the same as when you went up. So that's suggesting, based on the technicals we're looking at here in the middle chart, the weekly, that in fact there is a little bit of support here because the MACD hasn't crossed negative and the stochastic's still at 53%. But at the same time, if you're looking at the power of the 9-period exponential moving average pulling down the black line, that's suggesting that even if there's a bit of a bounce, there's a real good chance you're going to come back and test the 12s rather than stay in the 13s and jump to the 1466 9-period moving average. If you look at the monthly chart of the GDX, I didn't explain. The GDX is the market vectors gold miners ETF. Look, it cannot, since it broke down, November of 2012 in the 40s and 50s, 52 was the high. Only once in all that time has it closed above the 9-period moving average. No, I'm sorry, twice. There's a little one over there. Twice out of 3 weeks did it close, 3 months, did it close above, couldn't hold it, made the arch formation and went to a lower low. Now it doesn't even have the strength to make an arch formation, so it's going to have to be a surprise. It's going to have to be something happens, a military move, a bank crisis. It has to be a crisis to get the stochastic, which is at flat at 9%, to really spike and go to the 15% level, at least 15% level. And that would get it to the 1597, it would probably get it to 16 above the 9-period moving average. So far, sideways with lower lows and lower highs. And now you've seen the energy, the worst energy to the upside that we've seen in all this time. Invariably, what this does, it gives you an acceleration to the downside. That could be a climax, but we have to see it happen. Or there's just out of the blue, gold becomes a currency of fear, and the market vectors, gold miners ETF, will just suddenly spike higher. I just don't see it right now. But I cannot do this without looking at the XY, the DXY, which is the dollar currency index. And look how beautiful the monthly chart is made, a U formation. U formation. That always sounds like some medical term, a U formation. Anyway, look at the weekly chart. Peaks, a leg C, it's kind of struggling here against, look, there it is. We were talking about just a moment ago, left side, right side price time match that I've drawn in says by next week, the dollar is not will, it should, bounce against this inside wedge, Chapman wave inside wedge resistance line, and attempt to get to the 99.99 high. 99.99 high, that's like 89 cents. It's like it should happen in a blink of an eye. We don't know, but that's kind of what I'm looking at. Beautiful cup formation. Look at this EUR USD. Look at that arch formation. This is a challenge of two competing Chapman wave technicals. This is, in fact, I drew it as a parallel line. I wanted to draw it like this, and then I thought, it's going to get confusing for people, but I have so many people now over the years using the Chapman wave methodology that I'm going to discuss it. Let's see. Zit down the den says, Basil, it was August 2005 when I first listened to TFNN on Boston radio station. Wow, yeah. How about that? Okay, so now let's go. Yeah, Tom has been around for a long time, just building this whole network. When I listened, I was doing a lot of work that I in background. In other words, I had TFNN on most of the day, listening very carefully to what was being said, but at the same time, also there was a lot of work I had to do because of the positions that we have, and I'll show them in a moment. But TFNN has produced, Tom has got people on board. I'm really proud. I think that we have one of the finest informational, technical, and commentary that goes on throughout the day on any medium. I really do think that. There's certain people that have webs, blogs, and all sorts of things that put out a lot. But this is just there for the public. It is amazing that it has taken on so well. So the two competing patterns, the upside down Chapman wave falling axe and the arch formation. Falling axe also has a potential for an up channel. It broke the support, and now you've got yourself the inverted. You've got yourself the H pattern, lowercase h. What is a lowercase h? We saw it just now. This is the lowercase h. It looks like an arch formation, or you can go to what was a chapter 10, chapter 10, arch formation. No, sorry, 13, I think it was. I should know this, but no, it's been how many years? So yeah, the H pattern, there's the H pattern. So the H pattern looks exactly like there, and then it could produce a series of larger H's. That's what we might be looking at in the best case scenario. So let me just move this away, and I'll show you that the arch formation is forming in the euro, and if the euro, there's a whole bunch of techniques that we'll look at, but if the euro decisively takes out the low of the 20th of March, that whole February-March low, if it closes under it and within 3 weeks cannot get right back into this area right here above 1.05, or let's call it 1.055, that'll be a very big negative. And that would say to me that there's a real good chance that the dollar index in this environment is going to try for leg C. Doesn't say how high, above 100.39. Now, a couple of things. Let me just see. I had a quick question about the IBB. Dan wanted to know, okay, IBB, what about it? It's just stuck in a range. The reason why I didn't want to add to the shorts, I didn't want to add to the 200% short position or our own short position from way up at 399. I just see this. I think that money is just kind of drifting back into it slowly as a test. But the weekly chart says be real careful. It held the support. That's a pink line. But the monthly chart says, real good chance that within 3 months we're looking at the IBB, and it's down in the 260s to 250s, breaking the 285, 284 lows of August. Okay, so I hope that helps you. Very short term, what is the real question? Wait a minute. IBB. How's your assurance in jazz? Okay, jazz, the question is, I said I'd look at jazz. See, jazz is jazz pharmaceuticals. It's in that whole sector, that very weak sector, but it's actually been holding very nicely. But nicely is not good enough. This is still arching over peak A, peak B, peak C, D, or C1, C2. I'd be very careful on the upside. I don't think it's going to do much than a best case of 137. It's at 135.67, up at 166. I don't know, you have puts on it. So I'm going to suggest two things. You're still in the position. I'm going to grab the 120-minute chart. What I'd say to you is I think there's more a sideways move for now, but you've got the puts further out, I believe. You wanted to say that? Yeah, it is one of the few sectors that is holding today. You see, when a sector has been hammered as the IBB has, then you've got to look for the next sector within its concurrent arms, and that would be the XLV, which is right now down at 69.74. And that's starting to show a little bit more sign of wear and tear. And my thinking here is that the IBB is finding some support, some buyers, just enough stocks that are moving around. But it's the healthcare and the health insurance area, like Aetna, that is really going to suffer at this point as money is coming out. And now fund managers are getting a little nervous to say, okay, maybe we better get out of these other sectors. So the IBB could just hang around for a little bit longer, and Jazz is part of it, J-A-Z-Z, Jazz Pharmaceuticals. So this is, I'll give you the exact areas I'd be looking for. If Jazz pushes above 138.30, that's the high of yesterday in that arch formation, I'd say just be a little careful. You could even take off a couple of the put positions. You can always put them back, but keep as much cash as you can, number one. Number two is I want to see what happens on that rebound based on the Chapman wave trend gauge. Does it impact the market substantially, or is it just kind of a fluffy 7-8 point bounce from the lows and then it retests the lows? It's going to come towards 3 o'clock today, just watching it real closely, or maybe Sunday night into Monday if the market doesn't go down much further than this. So just be a little careful. I think you're in the right position. I mean, looking out on a monthly basis, I think that Jazz is going to go lower. I think that Jazz is going to break the low that was made, I think it was in October, of 117.26. So hopefully that'll be within your put position. I just can't remember. You told me, and I can't remember. I think it was December. If it's December, it's a little close. I think by this December it'll work, but I would prefer if it was more January, and I think that that's going to really work for you. So upside, kind of watching it very closely. Yeah, you can even retest the previous high that back on the 144 level back on the 9th of November. But what I'm really looking at here is that a series of lower lows and lower highs. It's making a little bit of a higher highs and higher lows, but once it stalls, you need to see by Tuesday 132.5 to 130 being hit. That'll be a guarantee that you're in the right position. Next question was S&P, short-term pullback or trend reversal. Adam, I'm going to be discussing that, well, not discussing it, I'm going to be going through that very carefully in my analysis over the weekend that I'm sending out to subscribers on my opening call. I believe at this particular point, look, here's the SPX, and here's a question, good question, but if you're looking at the monthly and the weekly charts, at this particular point, the stochastics 80% in the weekly chart. MACD has pulled back, but the histogram is still positive. I suspect that we're getting close towards the 2020 to maybe 2012, somewhere in that area is going to be really important. I have sell signals to sell mode upgrade yesterday in the Dow and the S&P. And that's daily charts, but I haven't yet. I have to wait for the close today to see if I even get a sell signal in the weekly charts. So to answer your question, I still have to consider that the major trend is up, but this is a very, very important period. Why? Because I'm looking at technical analysis, and that just says the MACD and stochastic and the dailies are very weak. The price has gone under the 200 period moving average. If there is a close under this low right here on the 14th of October, 1990, that's 40 points. That's 400 Dow points away. That's a complete change for me. I have to look at it in a very different way. So I don't know if that was a short, I'll check in the break if that was a question for you. After 6 consecutive weeks up, yeah, this is just the first week down. It's a serious down, but it's just the first week. I'll be back. Basil Chapman. Dow's down 138, S&P's down 14. Be right back, and we'll go through more of these patterns.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi folks, listen to Nico and Paige. I think it's a fabulous program. And just real quick, I'm so sorry. We had Brent waiting. I saw your name, but I kept looking to the left to the emails, and I just slipped my mind because I was looking at my charts. Sorry, Brent. You want to look at gold? Gold could have a little bit of a bounce right now, just based on the 120 on the 10-minute chart. It's at 1082. I'm a little bit behind, but it needs to really clear 1082.90, and that's a real little bounce. But I'm really not seeing all that much at this particular point. Maybe over the weekend we'll see something else. And if I'm looking at the just real quickly, we're going to go to Charlie in 1 second. I just wanted to show you the ES Mini. If there's going to be a rally, if the Chapman wave trend gauge kicks in, it really needs to move very quickly from 2028 right now. You got to get to 2030, and you got to get to that 2030 within. I mean, just as my show's finishing, you got to be above 2030. That's going to be really important. I think it could happen because a lot of the selling pressure is off just right at this moment. Let's go to Charlie in Framingham. Charlie, how are you?
Basil, sorry to do this to you. Anyway, SQQQ. I'm long, and I'm wondering if it'll get up to that the top of the gap there at 2066.
So 2066 is the low of the 22nd of October. We're looking at the ProShares Ultra Pro Short QQQ series. Congratulations for being in it. This is the 300% long. Sorry, you go 300% long, but it's made up of being short, so it's actually a 300% short position of the QQQ series, the NASDAQ NDX 100 trading vehicle. It's in leg B at this particular point. I suspect that it's not going to go just to a B, that it's going to fill the gap, and that the big test will be round about Wednesday or so, whether or not it's going to pull back sharply to the under 1896, the 9-period moving average, and then wait a little bit, because this is kind of what it's done before it spikes to leg C. But I'm going to make two suggestions, and I would say you don't have to move right this very second, but just think about it. If you've got a position that's done very well and the percentage gain must be very nice, then I'm going to suggest to you, you can do one of two things. You can take something off right now, kind of to reward yourself, because on a very short-term basis, this market's become oversold enough that it can bounce, so that you could always put that money back. But number two is, or you could raise the stop. It's at 1998 on some position, at least, to the candle, the 10-minute candle. That's a little more, 1946. Yeah, that's okay. So towards 1942, I'd say you can take something off, because if this rally attempt right now fails, you want to be in the short the Qs, because this is the area that's been quite weak today. All of a sudden, you've got your Amazons pulling back, etc. So what I'm going to say to you is, think about maybe raising the stop. You want to take maybe a little bit off, but the core position I would be holding. Why? Because I've got so many sell signals that have gone to sell modes in the daily charts. The QQQ is only just giving me the signal right now. I have to really wait for the end of the day, but everything about it says there's probably a sell mode unfolding right now, and that any bounce, the best bounce would be to the 112.70s in the QQQ series. It makes the H pattern and then comes back down. So those are the two things that I'd be looking at. Maybe take a little bit off, or you could just raise your stop, have a trading stop, and at the same, oh, there it goes. You see, I'm looking at leg B in the 10-minute chart, exactly what we were talking about. 2030, we're right there. So I'm going to recommend take a little bit off, keep a core position. I think that we are going to go step by step lower, at least for the next week. Then we've got to watch out, because sometimes going into Thanksgiving, there's a pretty good rally. But in the meantime, I've got these dailies. I haven't got the weeklies yet, but the daily sell modes. Hope that helps you, Charlie.
It does. Thank you, Basil.
And thank you so much for calling, and congratulations. So, folks, let me just do this real quickly. I don't even know if we even got time, and I'm going to give it a shot. So we've got a bunch of positions, and the positions go all over the show. And what I've done, let me see if I can just grab this. That's the end of the show. I'll do it Monday. Basically, what we're looking at is over the weekend, for my subscribers to my opening call, we'll go through all our short positions. One, in fact, has really caught on to the downside. That's what we wanted. And I'll explain what I'm looking at in the bigger picture and give some kind of outline as much as I can. Thanks for being here. Stay tuned for all the shows. You've got Nico and you've got Nico coming up, and everybody have a great weekend. See you on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,